Business activity in the Eurozone was up marginally in June, marking the sixth consecutive month of expansion, albeit at a slowing, sluggish pace, a closely watched survey showed Monday. The HCOB Flash Eurozone Purchasing Managers Index, PMI, published by S&P Global registered a figure of 50.2, the same pace of growth registered in May. Any reading above 50 indicates growth, while a figure below 50 shows contraction. Figures from last month were revised up after having originally shown a drop. The Eurozone economy is struggling to gain momentum. For 6 months now, growth has been minimal, with activity in the service sector stagnating and manufacturing output rising only moderately, Cyrus de la Rubia, chief economist at Hamburg Commercial Bank. In Germany, there are signs of a cautious improvement in the situation, but France continues to drag its feet. The expansion in the 20-country currency area was centered on the manufacturing sector, where production increased for the fourth successive month, according to the survey. But it was only slight, having eased to a 3-month low. However, there is no reason to be resigned, as the outlook has brightened according to the survey and companies are keeping employment roughly constant, said de la Rubia. In May, the European Commission, the EU's executive body, cut the Eurozone economic growth forecast for 2025 to 0.9%, from a previous prediction of 1.3%. June's flash PMI survey for the Eurozone was consistent with the economy flatlining, said Jack Allen Reynolds, deputy chief Eurozone economist at Capital Economics, an economic analysis firm. The index was consistent with the economy stagnating in the second quarter, with broad-based weakness in activity, he said. The recent Eurozone PMI data, showing marginal growth but overall economic stagnation, has both direct and indirect implications for the Iraqi Dinar, IQD. While Iraq does not have a direct monetary or trade linkage with the Eurozone as strong as with the US dollar, developments in the European economy can still influence the IQD in several important ways. 1. Eurozone economic sluggishness and global demand. The Eurozone, being one of the world's largest economic blocs, has significant influence over global trade and oil demand. Iraq's economy is heavily oil-dependent, over 90% of government revenue comes from oil exports. Therefore, any signal of slowing economic activity in major global regions like the Eurozone can lower global oil demand expectations, put downward pressure on oil prices, reduce Iraq's oil revenues, leading to lower foreign currency reserves, especially USD and Euro. Pressure on the Central Bank of Iraq's ability to maintain the dinar's stability. If Eurozone growth slows further, it may indirectly weaken support for the dinar due to falling oil income. 2. Investor confidence and currency sentiment. Global investors monitor major economic zones. Weak performance in the Eurozone can cause risk-off sentiment, avoidance of emerging market currencies. The Iraqi dinar is not fully convertible and is often tied to perceptions of economic and political stability. If global economic weakness spreads, investors might pull capital out of riskier markets, demand more USD rather than other currencies, strengthening the USD and putting relative pressure on the IQD. A stronger USD due to weak Eurozone performance may result in greater challenges for the IQD, especially in black market or parallel exchange rates. 3. EU-Iraq trade and aid implications. The EU is one of Iraq's top trading partners, particularly for oil and reconstruction contracts. If economic growth in Europe continues to stagnate, demand for Iraqi oil and goods may slow. EU investments or aid programs could face cuts or delays. European companies may slow down their operations in Iraq, especially in construction, infrastructure, or energy. Sluggish EU growth could lower trade inflows and business activity linked to Europe, reducing hard currency inflows into Iraq. 4. Outlook for the euro versus dollar and IQD peg stability. Iraq's dinar is effectively pegged to the US dollar, meaning its value is managed against USD rather than the euro. However, if the euro weakens against the dollar due to poor EU growth, the dollar strengthens, and since IQD is pegged to USD, the dinar becomes stronger in euro terms. This can make Iraqi exports more expensive to European buyers, possibly reducing sales. A weak euro indirectly strengthens the dinar via USD, which may affect competitiveness in European markets. 5. Inflationary spillover and imported goods. If Eurozone companies suffer and reduce exports, Iraq may face higher prices for European imports, shortages,